At exactly the wrong moment, your phone lights up, not with a message from a friend, with a bank alert you didn't expect. You didn't move your money, but someone else already did. That is the uncomfortable truth about financial panic. By the time the crowd realizes something is wrong, the first movers are gone. This matters right now because the world is sitting on more debt than ever before. Interest rates jumped faster than in any recent decade, and governments are quietly paying more just to keep yesterday's promises alive. On paper, everything still works. In real life, everyone feels poorer. That gap between paper and pain is where panic is born. So when fear hits the system, who actually moves first? It's not households. It's not people lining up outside banks. It's not even the stock market you see on the news. The first moves happen in places you never see. Imagine the global money system like a city at night. You see the glowing towers. Those are markets. But under the streets, there's a subway network that never sleeps. That underground system is where real money shifts begin. When something breaks, the first to move are the people who can borrow enormous sums for almost nothing. Large banks, hedge funds, major institutions. They don't wait for headlines. They watch tiny cracks in funding markets that barely make the news. A small example, one interest rate ticks up by 0.5%. That sounds boring, but to a $1 trillion balance sheet, it's not boring. It's a fire alarm. Overnight, banks lend to each other to keep daily operations alive. This is not investing, it's plumbing. When that plumbing tightens, even slightly, someone somewhere is forced to make a choice: hold risk or get out. They choose to get out. They sell the most liquid things first: treasury bonds, short-term assets, things that are supposed to be boring and safe. This selling pushes yields higher, which makes borrowing more expensive, which scares the next layer of players. They don't sell because they're panicking. They sell because the math stopped working. This is where panic really starts. Not with emotion, with spreadsheets. Now the irony. When the news finally reports markets are nervous, the first movers have already finished moving. They're sitting in cash or in safer corners, watching everyone else react. Then the second wave hits. Pension funds, insurance companies, asset managers who have rules, not instincts. If a portfolio drops below a certain line, they must sell. No choice. They don't sell because they want to. They sell because a policy document written years ago tells them to. Only after that do prices fall enough for the public to notice. That's when the headlines arrive. That's when people start asking if they should move their savings. That's when panic finally has a face. But by then, the exits are crowded. Here's the uncomfortable math hiding underneath. Global debt has grown much faster than global income. That means the system is more sensitive to tiny changes than ever before. A 1% rise in rates today does more damage than a 3% rise did 20 years ago. The structure is taller. The base is thinner. So when something snaps, the question is not, will people panic? The question is, who had the fastest door? The hype version of crises says markets collapse because people lose confidence. The reality is more awkward. Confidence is usually lost after the collapse is already in motion. Fear is late to the party. Think about 2008, remembering failing banks and angry crowds, but the first real moves happened in obscure funding markets most people have never heard of. The plumbing froze, then the towers went dark. Think about 2020. Lockdowns were shocking, but before stock markets crashed, large institutions were already scrambling for dollars in global money markets. The world didn't run out of trust, it ran out of usable cash flow for a few critical days. And here's the quiet joke of the system. The people who move first are not the bravest. They are simply the ones who live closest to the pipes. They don't predict the future. They feel pressure in the system before you ever see it on a screen. So what does that mean for everyone else? It means the story you're told about financial panic is backwards. You're shown the stampede, but the stampede is the final act, not the opening scene. By the time panic feels loud, the most important money has already relocated.